All right, everybody, on behalf of Trident Title, Performance Title, and Synergy Title, we want to welcome Paul Krasker, another session of Better Call Paul. Today, we are going to work on and talk a little bit about FIRPTA. So that, if you don't know, is for international transactions or transactions dealing with international buyers and sellers. And we're fortunate that a lot of the market down here in South Florida does have international people in and out of it and money in and out of it. So we just wanted to get Paul on for a quick session to talk about this because it does happen a lot. And as the market continues to heat up, and usually in the winter months, we see even more FIRPTA interaction. So wanted to get him on here to chat about it. And then if you guys have any questions, we'll leave some time at the end, or you can type them in the chat as well. So Paul, give us a rundown on FIRPTA. Tell us what we need to know.
So FIRPTA is the result of some very odd congressional actions. In the 80s, the government got worried that the Japanese specifically were buying up America. And the original FIRPTA list was a request that every property that is owned by a foreign entity be registered. And when the government realized how stupid that was and impossible that was to create that kind of a database, they turned it around. And what they really tried to focus on is to capture monies that they were going to lose when foreigners sold their properties. So they created a reporting requirement and a withholding requirement when foreign entities, whether it be a person or a corporation, etc., sell property within the United States. And over the years, the withholding requirement has changed and the notice requirement has changed. So I'm about to give you the most recent information about the exemption and then what you have to withhold when. But always please remember it's tricky, and have people call us to make sure that they understand it. Not when the sale is coming up, when they're listing their property. Because nobody's madder at you than a foreigner who you didn't tell that they had to withhold 15% of the contract price, and then one of our closers tells them, 3 weeks before closing. So talk to them up front and explain everything up front. So here goes. I'll try to do it in 5 minutes. First of all, there's an exemption from filing and withholding for any property that's under $300,000 sale price and is sold to somebody who's going to use the property as a personal residence for 50% of the time in use during the next 2 years. Notice that I did not say as a primary residence. It is as a personal residence. So you can use it as a vacation home, you can use it as a primary home, either one qualifies. 50% of the time in use does not mean 50% of the year. You don't have to be there for 50% of the year. All you have to do is, if you're going to rent it out for 3 months, then you have to use it for 3 months and a day. That's 50% of the time in use. Now, there's a complete exemption and no filing requirement and no withholding requirement if it's $300,000 or less and the buyer is willing to say that they're going to use the property as a personal residence for 50% of the time in use for the next 2 years. What happens when the buyer tells you that they're going to use it that way, but then at closing, they're mad at the seller and they won't sign the affidavit you need them to sign. Probably about at least 10 of you who have called me over the years with exactly that same circumstance. What I tell you to do up front in the contract, maybe even in the listing agreement, is to have a sentence in there that says all buyers must be willing to confirm that they're going to use the property for 50% of the time in use for the first 2 years as a personal residence. I would write that into paragraph 20. Buyer hereby confirms their intention to use the property as a personal residence for 50% of the time in use for the next 2 years. If they're not willing to say it then and sign it on the contract then they're not going to do it at closing, and you're going to get in a fight with your seller. So get them to sign off on the contract so that if they're not willing to sign at the end of the day, you've already got them signing something in writing that meets the standards of the exemption. Okay, enough about the exemption amount. What happens if it's $300,001 or $320,000? What can you do about the exemption now? You're going to turn back to me and say nothing, and I'm going to turn back to you and say you can still benefit from that exemption. How can you benefit from that exemption? Restructuring the contract. If it's a $320,000 contract and there's personal property in the residence and you can allocate $10,000 to the personal property, and then there's $15,000 worth of closing costs between the broker commissions, the doc stamps, and the title, you reallocate the doc stamp, title, and brokerage commission to the buyer's side. You reduce the purchase price for the real property accordingly. Now you've got a property that's under $300,000, still gets to use the exemption, and has captured a $320,000 effective purchase price. So that's all things that you should be able to accomplish and still get that exemption. But what happens if the property is a $400,000 property up to $1 million? So let's say we can't use the exemption and you've got a property that's $300,001 up to $1 million. What's the withholding requirement then? Okay, now that you have a withholding requirement, you have to hold 15% of the purchase price. That's not the net proceeds, that's the full purchase price. You have to withhold 15% unless you can get that same sentence that I was using in the contract before to gain the exemption. You can still put it in the contract, and now instead of 15%, you can have a 10% withholding.
Can you repeat that line for the contract so I can type it in the chat? We had 2 people ask about that.
Sure. Buyer intends to use the property as a personal residence for at least 50% of the time in use during the next 2 years.
Got it. Thank you. And someone said, can you run through the 301K scenario again with the furniture and the closing costs?
Sure. Let's take $320,000 is the price that's agreed between the parties. But the seller doesn't want to sign a contract at $320,000 because then they're going to have to withhold 10% of the proceeds, or $32,000, give it to the IRS, and they're going to have to file an accountant. They're going to have to get an international taxpayer identification number, and then they're going to have to ask for a refund at some point in the future. Or they're going to have to file for a waiver of withholding showing that they shouldn't have to hold that much because they're not making that much profit. But either way, it's a lot of paperwork. Either way, it's a lot of delay to get their money. So what they want to do is they want that $320,000 contract to still qualify for the $300,000 or less exemption. And the way you do that is allocating a certain portion of that $20,000 towards personal property, and then you allocate the rest of the amount to get it below $300,000 towards brokerage commissions and towards reallocating the documentary stamp tax and the title insurance. So if the brokerage commission is 6%, let's say it's 5% on $30,000, that's $15,000 right there. So you automatically go from 320 to 305 just by having the buyer pay the brokerage commission and getting a corresponding reduction in the purchase price. So there's no difference between a $320,000 contract where the seller pays the $15,000 broker fee or a $305,000 contract where the buyer pays the brokerage fee. So that's how you get it down to 305, and then obviously you get it down the rest of the way by having the buyer pay the documentary stamp tax. And
so Paul, is the contract still at 320 and you're just saying that you're allocating these things, or are you literally adjusting the contract and then having them pay outside of closing the balance of the things?
No, you adjust the purchase price on page 1 of the contract to say 300,000. Okay. And then in paragraph 20, in addition to that sentence I just gave you, you make it clear that the buyer is paying the $15,000 brokerage fee, and that the buyer is paying the documentary stamp tax on the deed in the amount of blank, and the buyer is paying the title insurance premium in the amount of blank.
Got it.
So that's how you adjust a very close purchase price underneath the exemption. But again, a minute ago, I was talking about sales between $300,001 and $1 million, and those, other than the ones that are so close that you can knock it under the way I just told you, those require a 15% withholding of the purchase price, unless you get that sentence in there that says that the buyer intends to use it, blah, blah, blah. Then you can withhold 10%. Now, if it's FIRPTA and your seller turns around and says to you, but I'm not making any money. I bought this for $400,000. I'm selling it for $350,000. There's no reason for me to send any money to the IRS. We can apply for a withholding certificate. We send a withholding certificate request to the IRS in Ogden, Utah. That's where all the FIRPTA people are. And we basically say to them, here's a copy of the closing statement. When we purchased, it says $400,000. We're selling for $350,000. Here's the draft closing statement. Here's the contract. We're not making any money. Please waive our withholding altogether. And we'll hold the money in our escrow account until the IRS comes back and says, of course not. You don't have to withhold. You didn't make any money. There is no capital gain. There's no withholding. Similarly, if somebody bought for $320,000 and they're selling for $330,000 or $350,000 and there's $20,000 of closing expenses, if you're only making $10,000, then there'd be no reason to withhold $30,000 to pay capital gains on a gain of $10,000. You can turn back to them and ask for a partial waiver of the withholding and say, look, I'm going to owe you $2,500. That's going to be my capital gains here. Just let me give you $2,500 and I want to keep the rest of that money. That's called a partial waiver certificate, and we can apply for those as well. You need to tell us well in advance that they're foreigners. You need to tell us well in advance that they want to apply for a certificate. and we can put all of the documentation together. We do need their past closing statement. We do need evidence of any improvements that they put into the property. If they're trying to justify that they bought it for 300, they put 100 in, and then they're selling it for 400, so there's no gain, etc. That's the kind of stuff that we need proof of. Okay, so we've covered the exemption amount, which is $300,000 and less. We'd covered the manipulation of things that are slightly above 300,000 on how you get them to be exempt numbers. And we've also covered the price range from $300,001 to $1 million that are withholding at 15% or 10% if the buyer is going to acknowledge that they're going to use the property for the intended purpose, blah, blah, blah. There's a third category, and that is all properties being sold by foreigners that are $1 million and more. And in that category, they say, we don't care what the buyer is going to use it for or not. This is a big property. We expect that there's going to be some capital gains tax, and we require a 15% withholding, period. We don't care what the buyer is going to do or not do. So on those expensive properties over $1 million, there's always a 15% withholding. Now you can still apply for a waiver certificate, and a lot of people do at that price range, but that's what you do. Ryan, anything unclear in that before I open up for questions?
No, that was great. Can you just also cover the addendum? Like there's the FIRPTA addendum that goes with contracts?
Yeah. So there's a FIRPTA addendum that says that this is going to be a FIRPTA requirement. There is a FIRPTA requirement on behalf of the seller, and all parties will cooperate to effectuate the FIRPTA addendum, to effectuate the sale based on FIRPTA. I think it's fine to have it in the MLS listing. I think it's fine to have it in the contract. I think it's fine to use the FIRPTA. Keep in mind that on the standard as-is contract, and I'll see if I have one just sitting here. Nope. There is language built in there that talks about FIRPTA. So unless you're trying to have an exemption clarified by using the FIRPTA addendum, there's really no need, if you're going to withhold, there's really no need to attach that FIRPTA addendum to the contract.
Got it. Makes sense. Let me see if there's any other questions in the chat. Someone said, does this apply to sellers with out-of-country resident status only?
So the applicability is that anybody who's a foreign national, as defined by the IRS code, has to withhold. Now, resident aliens, somebody who has a green card, don't have to withhold under FIRPTA. Somebody who's a US citizen but living abroad doesn't have to withhold under FIRPTA. There are certain circumstances where there are foreign nationals, and I had one the other day, citizen of Spain, been a tax-paying citizen of Spain for 20 years, has lived in the United States for 15 years, pays taxes in the United States. That person was not required to withhold because they passed the substantial presence test. They filed taxes over the last 5 years. They have a personal residence here, which they consider their primary residence, and they met other criteria. They weren't from certain countries, etc. So if you're wondering whether they apply, talk to us. There are certain circumstances where it's it's questionable. And there's actually a company on the west coast of Florida that we use and encourage your clients to hire to do the substantial connectivity test, I think it's called. And they have a form that gets filled out and they give you an opinion.
All right, another one says, I had a buyer that said her previous realtor said that she had to pay a fee because it was a FIRPTA property in Orlando. Looking for a condo for the same person in Lauderdale, she questioned me if she's going to have to pay a fee. Is that something you've heard of? Or?
Is this when a foreigner is buying?
I think so. Amanda, can you unmute yourself just so you can kind of guide that?
No, she's a buyer. She lives here in Palm Beach County, but she was looking to buy a rental in Lauderhill. And so she had told me a previous realtor, she was buying a rental in Orlando, and that realtor told her she had to pay a certain fee or percentage, which I had never heard of. I'm not a lawyer. And so she asked me if she had to pay that same fee in Lauderhill. But she's a buyer. She's looking at it for a rental. But what I'm coming across in Lauderhill is a lot of the condos in that area are foreigner owned, and they're the ones selling.
Yeah.
So when she said, well, they're from Canada, am I going to have to pay that fee? So that's why I'm asking.
So there is no fee to the buyer.
Okay.
In FIRPTA, period. It's only when you're selling. Now,
right.
The realtor may have disclosed to the buyer that when you sell, you're going to have to pay a percentage. But no, there should be no fee to the buyer at closing.
Paul, could it have been the seller's realtor trying to offset the tax fee that the sellers would have had to pay onto the buyer?
Oh, I mean, that's a negotiable point, but it shouldn't be considered a fee. It should have been considered, a negotiation item. It shouldn't have been presented as you're required to pay this.
Because I've heard that too. I will tell you, like when I've bought flips that were from out of country investors, they've said, well, if we sell to you knowing you're not going to own, then our owner's going to have to pay, a different tax. We want you to have to pay that. And they've tried to negotiate that into the transaction.
Yeah. So, and that gets back to most buyers, even investors, are willing to say that it's their intention to use it as a personal residence for 50% of the time and use for the next 2 years because they know they can't get the deals from these sellers if they don't say it.
Yeah.
And from my perspective, if I'm representing a seller, if there's an investor who's willing to lie to get the deal, then I'm not going to stop them.
Yeah, the investor's the one lying, not the seller. So it's
and the truth is, all you are is expressing an intention. You don't have to follow through with it. I have an intention to go out and shoot 3 under par this afternoon, but I doubt it's going to happen.
But there's a bogey somewhere on the back.
Yeah. So there are a lot of people who just play the game and say what they need to say to get the deal done. Many of those same people, if you don't get to sign the contract and say it in the contract, when it comes time to closing, they use that as a bargaining chip. When they find out that the hot water heater is 14 years old and rusting out, and they say, well, I'm not going to sign your FIRPTA affidavit if you don't buy me a new hot water heater. So you definitely want to get them to say it in the contract before those kind of things come up. But yeah.
Makes sense. Gary, I think you had
on the other end of that, so does a buyer that's buying, when they decide to sell, are they going to have to pay a fee or a percentage when they sell?
Yes.
Yeah, if they're international, yes.
No, but the person buying is not international. The seller is international. So my buyer is buying a property that is Canadian owned.
Yeah.
So they're buying it as a rental. But when they go to turn around and sell it at some point, are they going to have to pay a fee at that time?
No, the seller
No.
has
No?
to pay the
Okay.
fee at closing.
Okay, so they're not paying a fee if they turn around and sell it at some point in the future.
No.
Okay, great.
All right, Gary, go ahead.
The question I had was more like the scenario to know when to even consider, like where it applies for like the exemption. So say a house was, they bought it for 500,000 and the market turned and they are willing to sell it for 450. I understand what you're saying with the exemption for that, but is it always usually apply more when there is profits left or equity left in the house to that the holding happens? Because what if they bought it for 500 and sell it for 500 and that's what they owe still on the mortgage? How does that affect the mortgage getting settled if they don't qualify for some sort of exemption?
So the mortgage has nothing to do with your basis in the property. Your basis in the property is what you acquired it for and what you put in improvements, in capital improvements. So if you bought for 500 and you put $50,000 in with a couple of bathrooms and a kitchen, your basis is 550. If you sell it at 575 and you have $25,000 worth of closing costs, then you didn't make any money.
That's what I'm asking. Is the FIRPTA thing only really apply when they know that there's going to be some sort of yield back for the foreign seller, or?
Yeah, so
And
it's
there's
not.
capital gains.
It's not. The FIRPTA is based on the contract sales price. So in my example, if you're selling it at 575, you'd have to withhold, let's say it's a purchaser who wants to play ball with you, and it's 10% withholding, you'd have to withhold $57,500 unless you applied for a waiver of withholding.
Well, that's what I'm asking on the mortgage side. How does the title get closed and the title end up getting transferred? What if that seller doesn't have a way of coming up to settle the mortgage because of the whole withholding?
Then it's a short sale, or you have to file well in advance for a waiver certificate.
That's what I'm trying to get at, is the extra knowledge to know in certain scenarios that based on the seller's position in the property to know which way we need to push.
Well, I think kind of what he's asking too is does mortgage number one get satisfied before this tax withholding, like in a normal situation, or no?
And the answer is both have to get satisfied at the same time or you can't close.
Got it.
Yeah, that's what I'm trying to.
So then it would be a short sale situation if you're off, unless you have this appeal approved.
Correct. Or unless you apply in advance and say to the people, I'm so far below that I'm trying to sell it for, $100,000 less, and I need your approval now so that I could just pay off the bank and be done.
Got it. Another one, scenario, property marketed at a market value $320,000. Seller wants to sell at $299,999 to get the exemption, but doesn't want it to appear staged. Is the listing agent allowed to discuss this with buyer's agent? Basically, is the listing agent going to get in trouble if they do that when they know the market value? No, right? Because the seller and the listing agent can agree to sell it at whatever they want.
Yeah, and I always tell people, look, negotiate when you're close to that number, negotiate whatever you want to negotiate. If it's a cash purchaser and you could do the reallocations that I'm talking about, that's easy. You could still get your 320 and still qualify for the exemption. Just send it to me and I'll work up the contract to make it clear for everybody. If it's not a cash purchaser and it's somebody who has to get an 80% loan to value, and they can't have the purchase price reduced below to 320, then you're going to have to do a withholding certificate for 10%. Or you're going to have to sell it $299.
Got it. Abby, did you have a question? I see a hand. If so, just unmute.
I do have a question. So the FIRPTA addendum, the actual one that we put on the FAR bar contract, If we're under 300,000 and FIRPTA doesn't apply, I don't need that addendum.
Correct. Correct. I think there's somewhere on that addendum that says that FIRPTA is not applicable, or somewhere on that addendum, I haven't looked at it in a while, that says that I have an exemption that I'm entitled to use. So if you're using the exemption and the buyer knows that you're a seller's foreigner, sometimes you use that to clarify that it's exempt.
Okay, so I'm usually the seller, and I've got a seller with a property under 300,000. The
Okay.
buyer is going to live in the property full time. So I
Right.
know it's all good. Do I have to have a FIRPTA addendum
No, you
to
do
the
not.
contract?
No.
Okay, when do I actually use that FIRPTA addendum?
You want to use that addendum if you're going to have a withholding obligation, to let everybody know up front that this is a FIRPTA deal and there will be an obligation to withhold.
Okay, and when that's the case, I don't put that clause in, buyer willing to use 50% or more of the time as personal residence, because it doesn't matter. Let's say it's a $400,000 property.
No, you still want to put that in paragraph 20,
Okay.
because you're going to take the withholding obligation from 15% to 10% if you get
Okay.
that sentence in the contract.
Okay, and in the past, I hate to tell you this, I didn't know that you guys would handle this. I was requesting all of my Canadian or out of the country sellers contact an accountant that speaks their language so that they understand what's going on with FIRPTA. So in the future, I can refer them to your law office?
Sure.
Okay.
I
had no idea.
I have the addendum too. I just want to share my screen real quick and show, just in case anybody hasn't seen it or doesn't know.
Thank you, Paul.
I'm going to share that across just so you guys can see. And if you can't read it, or if it's tough to see, I'll just go through it real quick. So the top is a seller and a buyer, just like normal, the address, the buyer's and seller's initials. And then it reads, if a seller is a foreign person, as defined by FIRPTA section 1445 of the IRS code, requires a buyer of real property withhold 10% of the amount realized by the seller on the transfer and remit the withheld amount to the Internal Revenue Service unless an exemption applies. The primary exemptions are: 1, seller provides buyer with an affidavit that seller is not a foreign person. 2, seller provides buyer with a withholding certificate providing for reduced or eliminated withholding. Number 3, gross sales price is $300,000 or less. Buyer is an individual who purchases the property to use as a residence, and buyer of a member's family has definite plans to reside at the property for at least 50% of the number of days of the property is in use. So this is what Paul was explaining before. During each of the first 2 12-month periods after transfer, buyer and seller agree to execute and deliver as directed any instrument, affidavit, or statement reasonably necessary to comply with FIRPTA. If seller applies for a withholding certificate, but the application is still pending at closing, buyer agrees to place the 10% tax in escrow at the seller's expense to be dispersed in accordance with the final determination of the IRS. So if it's pending at closing, you don't have a choice. You put that 10% in until a decision is made. And then the last line, buyer shall timely disperse the funds to the IRS and provide seller with copies of the tax forms and receipts. So that is it's under FARBAR, FIRPTA, CR1 is the.
Yeah, scroll down a little bit, Ryan. Is that a box that's just there?
Yes.
So I think what they're giving you that box to put in is to write in the sentence that I was telling you to put in on paragraph 20. And sort of copy that language from up above where it says buyer intends to use the property as a blah, blah, blah.
Yeah, it's 50% of the use. Yep.
Yep.
Anybody else, any questions on that? That document is in all of your dot loops, DocuSigns, whatever it is that you're using. Everybody has access to that in Florida Interactive Forms. Another question, what if someone sells the mansion for $300K, but the helicopter on the I thought it was serious until I started reading. What if someone sells the mansion for $300,000, but the helicopter on the property for $2 million?
Yeah, good luck trying to justify that one. Yep.
Anybody else? Any questions before we wrap it up? All right, gang. Thank you, Paul, as always, and everybody else on behalf of Trident Performance and Synergy. We appreciate you guys. Join us Monday. We are doing how to sell a listing in 7 days or less. And then we have a lot of great new topics coming up for Better Call Paul for next month. So see everybody soon. Hopefully see you guys Monday. Have a great day and a great weekend. See ya. Thanks, Paul.